Hello, this is Dennis Black, and this is part 3 of our series of professional development selling skills for mortgage loan professionals in how to handle non-buying attitudes from your customer. As we look at this issue, we're going to address it from 2 points of view. One, from the realtor that you're selling to, your mortgage services, and 2, from the borrower you may interact with looking for the proper mortgage. So the third and final non-buying attitude is called a valid objection. Now there are 2 types of valid objection that you will encounter most frequently from either a realtor or a borrower. The first is a product gap. Another lender can offer a product that you cannot provide. That is fact, and therefore you have to figure out how do you minimize this in the realtor's perspective of analyzing your services. The second is with the borrower. Now, when you deal with the borrower, the most critical component is to make sure that you understand all the factors they're looking at and not let a product objection break you down in terms of why they should work with you. The second type of valid objection is price. This is when another lender offers a rate considerably lower than your mortgage rate on a particular product. And whether it be the realtor, who rarely is price-oriented, but may be, depending upon their client's demands of trying to find the right lender from a financial point of view on points, rates, and fees, what I call the RPF factor, and also from the borrower's point of view, how to look at making a decision and choosing you as a lender if your pricing is different than what they're looking for on a particular product. That requires some skill, and we'll give you those tips on how to do that. First, let's take a look at the realtor. When you work with an agent, they're going to have a product-oriented objection if, in fact, their client has a need for a product that you do not provide. To them, that's a hindrance to being able to work with you. Whether it be the realtor or the borrower, I want you to remember that a valid objection is a hurdle. It is not a wall. It does not end the call. It momentarily delays getting to a point where you can ask them to work with you. It will not be a finite end of the call type issue when you get a valid objection if you think quickly on your feet and apply the skills I'm going to provide you with. So to the realtor, a product objection. Let's assume that they're looking for a client working with one that needs a bank statement loan, a non-QM product. You may or may not provide that product. If you do not provide that product, and that is in particular what that borrower needs to qualify to get the mortgage to buy the home, the realtor will use that as an objection. Therefore, what you have to do is try and minimize it in the big picture of things working with that agent. So ask them on their last 5 to, let's say, 10 transactions, 5 is a good enough sample, how many of their clients ended up with a bank statement loan as the end result on their mortgage when they acquired the property. Let's assume that the answer might be 1, 2, heck, it could be 3 of the last 5. Simply percentage the utilization of that product, and doing so, you then minimize in the big picture of things how frequently that comes into play. If it's 1 out of 5, it's obviously 20%. If it's 2 out of 5, it's 40, and 3 out of 5, it's 60. That means that anywhere between 40%, 60%, or 80% of the time, that product is not needed for the realtor for their clients. Minimize the perspective of the need for the product that you do not provide by assigning a percentage to it. Then move off the topic. Now let's talk about rate, points, or fees. With a realtor, they're not normally concerned with price, but some will look at price because their client is wanting them to do some evaluation of who is competitive pricing-wise before they refer 2 or 3 cards of lenders for the client to engage with. Remember, clients will go off that list and do many times shopping on their own. But let's assume the realtor is doing that evaluation. You do the exact same thing as a product objection. Ask the realtor, so you're looking for rates, points, and fees on, let's take a 30-year fixed rate mortgage. Another lender is publishing a rate, points, and fees that are substantially lower than yours. 3/8 to a half on a conforming, maybe even 1/8 and a quarter on a jumbo can be substantial. So once again, ask them on that particular product, what percentage of their clients ended up getting that product as the end result of their financing. You may be more competitive on FHA or VA, on a USDA product. You might be more competitive on an adjustable rate mortgage, depending upon the client's length of time in the property. So you have alternatives to offer to the realtor, but find out how often that actual product and rates, points, and fee is the primary criteria before they recommend a lender to their client. Now let's talk about the borrower. A borrower, if they have a product objection, that's only going to be their mortgage. They don't have multiple things they do in the course of a year like a realtor. It's their single mortgage. So once again, your skill has to be sharp. Remember the 5 W's that we went over in a previous session that we provided for you on this learning series. You want to look at who you're dealing with, where they're looking to do their transaction, when they're looking to do the transaction, why, and more importantly, what is the criteria they'll evaluate to make their decision. Remember the 5 W's. And with the knowledge you gain in those areas, what's critical to understand is that now you have a chance to use all that data and potentially switch the product offering if you do not provide what they're looking for based on all the information you've gained. Ask the borrower to stack rank their criteria. How important is product? How important is turn time? How important is ease of use of the application process? How important is communication and ending up getting that property as the end result for their loan? Those factors all come into play, not just product. So if you can switch the product based on the knowledge you've gained with the 5 W's of questioning, you have a chance now to get the client to look at you as an alternative based on you knowing their needs more efficiently than someone who's just offering a particular product. Finally, price. For a borrower, this is critical because it determines more often than not what they end up choosing as a lender. But remember, no one writes a check or has an auto deduct from their bank with an interest rate or points or fees. They pay a monthly mortgage payment, not a rate. So our job is to try and find the best payment for the borrower with different product selections that may end up helping them based on, again, how long they're going to be in the property and other criteria factors. Don't worry about having to match rates. Don't worry about trying to give away pricing until you evaluate all options to help them get the best possible monthly mortgage payment. So when you get a valid objection, don't panic. Remember the tips we provided you with on this session, and you'll win more than you lose. And in selling, that's the name of the game. This is Dennis Black. Good luck and good selling. And remember to sign up and subscribe to our YouTube channel so we can provide more quality training going forward into 2025 and make yourself eligible for 50 spots who will get personalized training in Q1 of 2025.